Ionic Digital just dropped their Q2 2026 earnings. Total revenue hit $48.6 million. Adjusted EBITDA came in at $37.6 million, and they reaffirmed their 2026 revenue guidance of $190 to $195 million.
Right, but they also posted a $35.3 million net loss for the quarter.
Yeah, exactly, which we are definitely going to unpack. But your mission today, as you listen to this deep dive, is to analyze an absolute masterclass in corporate transformation.
It really is.
I mean, we're exploring how a company pivoted virtually overnight from crypto mining into this high-performance computing and AI infrastructure powerhouse.
And well, when you look at that $48.6 million top-line revenue, which, by the way, is up 31% year over year, the number itself isn't the real shocker.
Right.
It's the revenue mix. 90% of that revenue now comes from digital infrastructure leasing.
Wow.
And just 12 months ago, that number was sitting at zero.
Zero. Going from 0 to 90% in a single year, I mean, you don't just build that from scratch. Okay, let's unpack this, because it's like a gold miner realizing they can make exponentially more money by renting out their massive power generators to the whole town.
Yeah, that's exactly what it's like.
But they didn't build this infrastructure for AI originally, did they? How did they execute this pivot so quickly?
Well, they built it for Bitcoin, but they realized AI has this massive bottleneck right now. AI workloads are completely starved for power.
Oh, for sure. Running all those GPUs takes a lot.
Right. They require monumental amounts of uninterrupted electricity to power and cool. And tech giants are facing extended development timelines, like 3 to 5 years, just to get the grid power they need.
3 to 5 years is an eternity in tech.
Exactly. So Ionic stepped in with these power now solutions. They already possess what the market is desperate for, which is immediate, energized power.
So they're basically sitting on the picks and shovels, or, the power cords. And the scale of their assets is massive. It's huge. They control an 822 megawatt power pipeline across the high-demand West Texas market.
And the crown jewel is their Ward County campus, right?
Yeah, Ward County alone has 700 megawatts of total utility capacity.
Wow.
And they already have 234 megawatts of that energized and running.
Okay, so that explains the financials, because they've already got 323 megawatts contracted out, which translates to a staggering, $2.6 billion in currently contracted revenue?
Around $2.6 billion, yeah. And what's fascinating here is how they bypass the usual delays. Usually, waiting for ERCOT, the Texas grid operator, takes years.
Right, for all the approvals and testing.
But Ionic is leveraging an interconnection agreement they secured back in 2021. Because that permission slip was already signed for their crypto operations, they get to skip to the front of a multi-year line.
Oh, so they don't even need a new test.
No new commercial readiness test to expand to that full 700 megawatts by the end of 2027. It gives them a massive speed-to-market advantage. Okay, but here's where it gets really interesting. If they are making so much leasing revenue and skipping the ERCOT line, why did they report a $35.3 million net loss for the quarter?
Right, I know, it looks alarming.
So what does this all mean? Where is that cash bleeding out?
Well, you have to filter out the accounting noise. That net loss is heavily driven by a $28.2 million non-cash loss on the legacy Bitcoin they still hold.
Ah, so it's just a paper loss on crypto fair value?
Exactly, because the market price fluctuates. Plus, there's a $27.2 million tax provision. So none of that really reflects their day-to-day cash generation.
Okay, that makes way more sense. So you have to look past the paper losses to see the actual operational health, which is incredibly strong.
Very strong. I mean, their adjusted EBITDA was $37.6 million.
Which represents a massive 77% margin.
Yeah, 77%. Yeah. And they have exceptional liquidity right now. We're talking $415.7 million in cash, plus $168.7 million in Bitcoin.
And zero debt, right.
Zero debt. That level of liquidity gives them the cushion to pivot this aggressively and, confidently reaffirm their 2026 revenue outlook.
They've essentially taken their most scarce resource, which is immediate access to electricity, and they are renting it to the highest bidder.
Pretty much.
Which leaves you, the listener, with a final provocative thought to ponder on your own. As the next wave of AI inference drives an insatiable demand for electricity, will companies sitting on existing energized grid connections become the most powerful real estate barons of the 21st century?
It's definitely something to watch.
For sure. Thanks for joining us on this deep dive, and be sure to follow the show for our daily earnings coverage.